How's it going, guys? Welcome to the Proving Ground Review. As you guys get logged in, let me know if you can see my screen and if you can hear me talking. I'm trying to get the projector here in-house set up so that our members here can see the screen as well. So we'll get started here in just a couple minutes. As you guys get logged in, let me know if you can see my screen and if you can hear me talking. Thank you, John. Appreciate it. Yeah, I got to start next door. Okay.
Like my notifications.
Yeah.
That's pretty good. I'll turn it off so it's not recorded.
Good call.
Trader with our sheepish notification.
Oh, I saw what you did with the words there. That was clever.
There you go.
All right, guys, let's go to get started. Appreciate you guys being here. What we're going to work on today is something that we've actually talked about in the past. And there's been a lot of questions about it as every once in a while, I'll kind of drop a hint about some of this. And, people are really curious about it. And so, I've had a lot of questions about it. So I just decided I was going to cover it on the review tonight. So before we get started, of course, if any of you guys have questions as we go along, feel free to ask. And they don't necessarily have to be about the topic, but even just in general, if you guys have questions. But we're going to work on the TNTs today. And specifically on the TNTs, we're going to work on the thick orange. So, and I've said this in the past, but the indicators work a couple of different ways. One of those ways is or a few different ways. One of them is pattern based. So we can trade based on a pattern like we get with the notifications with the alerts. So you get a notification that says Hydra or flat top, duckbill, dirty pressure, whatever it might be. So those are specific patterns with specific attributes, and when all those attributes are present at the top of the hour, obviously we can take that trade if we've back tested it. And obviously that's what I encourage with anything that you try out, is that you back test it first. And part of doing that with the patterns is that you understand some of the nuances of the indicators. So when we have you back test a flat top and I show you what I'll show you today, you'll start picking up on some of these nuances of the thick orange just by paying attention to it as it's doing its flat top thing. And so that's kind of the concept. So it takes a little bit of a retrain, because when we first learned about the TNTs, we learned that 2 of them are directional and 2 of them are inverse, right? So that by that explanation, directional means if the thick orange is pointed up, that it's indicating what? Buy, right? That's by implication, that's indicating that it's time to buy when the thick orange is up, or you get a point to the buy side, right? If you're looking at like a 3-pointer, you need 3 out of 4 points. So thick orange up, then orange up, blue dotted down, that's 3 out of 4 for the TNTs to give you a viable buy or sell. So the retrain here is that the thick orange also works, so pattern based like a flat top, reactively, like in the way of a 3-pointer, right? It points up, and so that's indicating up. And then illogically, right, where thick orange points up and it's telling you to short, to sell. So in that regard, it's actually working inverse or illogical to the way you understand it at its base level, right? So the reason for that is because the thick orange is very, what's the word? It's reactive to the liquidity and volume in the market. So you'll notice that, for example, we're moving on the Euro USD here. We're moving down, right? And notice the value, negative 40, and we go lower, it's negative 77. We go lower, it's at negative 100, and then we kind of flat top, and it's again negative 100, but flat. Notice it hasn't moved a lot of value, but still we got quite a bit of movement. Well, relative to the movement within the market for that time, but that's 20 some odd pips. Now, going back up, we go negative 100, we jump all the way to 71, and we kind of retrace this candle, which, by the way, the value of the thick orange stayed negative 100 from this candle to this candle and still moved 13 pips. Where here, it moved back up, 15 pips, but the value moved 30 points, right? So 29 points or so. So it's showing that there's still weight to the short side, to the sell side, right? Not that it's saying that you should sell at that point, but that's just kind of what it's showing, is there's still weight to the sell side. So here then we have 1, 2, and then sideways on the other. So we have 2 out of 4 points giving us an indication long, 2 out of 4 points giving us an indication short, right? Then thick blue is up, which means down. Then orange is down, which means down. But then thick orange is up, so that means up, and blue dotted is down, which means up. So we have kind of sideways, right? But we can see that we're expelling a lot of value for very little movement. And here it goes from 71, right, to 39, negative 39. So that's like another 30 points, right? So when we look at that, we're identifying that the weight is still to the short side, but more importantly, it allows for us to use this thick orange a little more dynamically. So here we've got a red candle, and we've got thick orange up, blue dotted down, thin orange up, and thick blue down. That's 4 out of 4 points telling us what? Buy, right? But it's actually telling us to sell. That's what it's telling us to do. It's not saying buy and it's wrong. It's telling us to sell. So your one indication that you're actually getting more of a sell than a buy in this situation is the red candle. The thick orange moved up as the candle moved down. That means miners are trying to take the market up, and the thick orange is reflecting that, and the majors are taking it down, right? So where could we look to see how that's actually playing out? Can we prove that? Yeah, what are the miners doing? What are the majors doing? Now you just need another confirmation that the majors are going to win that fight, right? Because sometimes the majors just can't go any lower, so they have to go back up. What other point of validation do we have? We have a couple, right? So if we're looking at miners going up, majors still pointed down, we have the thick orange that's now telling us, yep, this is an illogical sell setup, and then we have pressure greens on bottom, right? So we have a couple of things that are now telling us to sell, not buy. Yes?
Can you address that looks somewhat like a duck bill, why it isn't going to go back up?
Because it's a 1 hour. Duck bill doesn't work the same on a 1 hour as it does a 1 day. Good question. A lot of times what you'll get is continuation and consolidation. So you'll get small movements towards the duck bill and then consolidate, and then it'll pick a direction. That's usually what happens with a 60-minute duck bill. A lot of times if you get double confirmation, both major and minor are pointed down during the duck bill, you're more likely to get a little bit more up. But most of the time it's going to continue at least momentarily and then consolidate. So here we're getting some down movement or some down indication, right? Now the thick orange is reactive, the move's over. You can probably usually take this about 2 concurrent times. So if thick orange was still up and this candle was red, then you probably take it for another smaller scalp on the next candle. Where now it's reactive, it could either go in the direction or actually it's likely to go in the direction until it gets to 0 or negative 100 in this particular example, generally, right? And then after that, the move is done, and you'll start going reactive to the opposite direction. And I'll show you some examples of that because just explaining it with words doesn't really do it justice. Okay, so thick orange is now being reactive, right? It's reacting to how the market is moving. There's obviously more volume volatility added to the market at this point. You can see we went from negative 43 and Willie jumped up to negative 25, but we obviously had a really big run, right? So that's the issue with the thick orange in terms of delay is that it's being reactive based on the current market conditions. From 1 hour to the next, you can get an increase in your volume and volatility. So then knowing that about the TNTs, the best times to not rely on them is when you're using them for a post during a market open or close to an announcement. Because what happens with market open? Increase in volume and volatility, right? So you'll see these types of knee-jerk reactions a lot where thick orange might be giving you a sell chomp and all of a sudden it goes the other direction, right? Because it's contingent on the liquidity and volatility in the market. And so from one candle to the next, it can change aggressively, which is difficult because obviously we're using it on the post. So when you're getting a read on the TNTs, it's 5 o'clock or 5:55, it's almost 6 o'clock, and you know that the U.S. market opens at 6 Mountain Standard Time, then you're probably not going to count on the TNTs very much for that 5:55, 5:59 post, right? Because the new volume it may change its output. Okay, so keep that in mind. Also in the evenings, right? 5 o'clock Aussies open. 7 o'clock you get the Asian markets open. At midnight, these are all Mountain Standard Times. At midnight, you're going to get the British pound. 1 a.m. you're going to get the euro, so on and so forth. So you want to watch out for those when you're looking at the TNTs. All right, so let's look for another setup like that. Here we go. So here's one where again we had thick orange. So right here it's reactive. It hit 0, and then it pointed down by almost 20 points. While the market moved up, right? So we actually have, what is this called to some of you guys? Sell chomp, right? A chomp to the short side? Okay. What about this? Well, it's not exact, but it's kind of, what does that usually represent?
It's kind of a hiccup.
Well, double, right? So what is that called?
Hydra.
Hydra. So a lot of times if we get a Hydra with the heads up, which way are we looking to go? Up. Okay, so if you looked at it, you said, it's not a very clear Hydra. It can almost be a hiccup pattern or a Hydra. It's not very clear. Pressure is up. Green is on bottom, but pressure's up, right? And now we've got this chomp. So do we have validation at all here that we could still likely get an up? If anything, this needed validation that it was going to go up because this is not a clear Hydra or a hiccup pattern, right? Miners are not crossing touching the channel and for the hiccup pattern, and miners are touching, so that doesn't give us the Hydra either. But there's still some semblance of one of those, and in either of those situations, we'd be looking for a long. So is there any justification we could get for the major miner that would determine whether or not we should take that long, do nothing, or take it short? Well, yeah, thick orange blue dotted right now is telling us that we get a second confirmation to long. Now you're counting different, right? You're not saying, okay, 3 out of 4 points on the TNT, I've got major minor crossed and pointed up. Now you're saying, okay, I need validation for this. What does this look like? Okay, I can see the illogical setup there. So I've got 2 very strong points telling me that I'm going to see a buy here on the next candle because of the illogical.
Green candle going the opposite direction.
That's your first clue,
So watch the color of the candlestick.
right? Watch the color of the candlestick.
Pay attention to that.
Nobody does.
That's telling me to go down.
It's telling you that it's signaling that. It doesn't mean that it's going to, in this case, it's telling you signaling it's going to go up right now.
That's why I do my bad trades. I'm like, dude, everything looked good.
Yep, because we live in this box sometimes, and every once in a while somebody just needs to cut a hole in it and say, look, there's this other piece, right? And I do that too. I get stuck in my box and somebody will say something. I'm like, oh yeah, aha moment, right? That makes total sense. So here, this is telling us to buy, right? This is telling us to buy, and our first clue was the green candle, right? So if we were looking at major minor first, we'd say, I think we could buy on this. I need to see if there's any indication that we can buy. Well, yes, we have this that's giving us indication that we can buy, right? Pressure is up, so that's another indication. Green is on bottom, but pressure's still up, right? So we have a lot of indication here that we could still see a buy. So let's go to the next candle. All right, so we bought, and the thick orange still moved down. It still moved south, right? Major and minor are still not consistent with a short movement quite yet, right? We can kind of go either way. Pressure's still up and it's starting to positively converge. It's not on top yet, but it's starting to positively converge, meaning they're pointed up, green's on bottom, and it's starting to lean into red, possibly going to pop on top of red. That's positive convergence. Negative convergence is green is on top already, and they're pointed up, and it starts to lean into red where it's going to pop below it. That's negative convergence. And mind you, when you guys look at that, pay attention to your levels of support and resistance, because that's what it's drawing. It's saying, oh, if I just hit a level of support or resistance, and it'll kind of, green will pop on bottom, and they'll spread out. They'll kind of go sideways. But we won't look at that. That's probably taking it a step too far. This is already complicated as it is. All right, so let's just say that we're going to continue with our long trade. So now we've got thick orange, and it still has value to the short side, so we can still see some potential of long. But normally we only want to take this about 2 candles, right? So there's 1, there's 2, and after that, just leave it alone, because usually what happens next is not very aggressive, right? Now, one way to know you're done after the first or second one is if we're going up still and thick orange is moving down, if this value gets to negative 100, even during the candle, so on this candle, say it pulls back a little bit and this hits negative 100, then you're done. You don't want to try to take it. What'll usually happen, though, is you'll get another green candle, but then thick orange will point up. It'll become reactive. So that's one. And I'll show you guys a couple of these. The other is that on the next candle or one of these candles, thick orange becomes reactive. It's pointed up, and we get a green candle. And then when that hits 0, when the thick orange hits 0, then you can start going the other direction. And I'll show you that example too. So you have triggers that'll tell you in and out as well. Now, obviously, they don't always work, so you got to just be vigilant. You got to look at it in and of itself. It's not enough, but it's great as an additional confirmation when things don't look very clear. All right. So let's go to the next candle. So continuation up. Now we're done, right? Because thick orange is now reactive. So we're done with the reactive. Now this is actually a dirty pressure. Green popped on top, major minor pointed up. So there's still going to be a little bit of up there, but this is also the follow-up to a hiccup and head fake. Does anybody know what that? So if we had just seen a fake out, majors just faked out the minors, and now they're both pointed up. What is this telling us to do next? Sell, right? Again, illogical. These lines are pointed up, but it doesn't matter which direction they're pointed. All that matters is we understand what they're telling us. Yeah, so right now they're telling us get ready for the short. Now we have conflicting information here, right? We have a dirty pressure that's telling us to go long, but then we have this follow-up that's telling us we're probably going to see a short. So what's going to happen on the next candle then? Well, statistically, we're going to do both, go up a little bit and go down, right? So what you can do is you can say, all right, well, then I'm just going to use a 5-minute chart and position as it moves up to short and get more pips, or I'm going to try to scalp the long, and then after I'm done with the long, short, right? Okay, so just some ideas there. So let's go to the next candle, see what happens. So we get some up. It moves about 9.3. 8.3 was to the wick. 9.3, and it moved down 10.7. Let me check that. Yeah, 10.7. So it moved both directions about the same amount, right? Ultimately, we saw that we're going to see more of a down Here, green now popped on bottom, so we have another dirty pressure short. But now we're reactive, right? Thick orange is pointed down, and we've got a red candle, so it's more reactive now. So we're not looking at that one in terms of paying attention to the thick orange nuance today, but it's just a dirty pressure setup. Just wanted to point that out. Okay, now let's look for, so again, notice it went reactive, right? Red, down, and now it's at negative 100. So that's the end of that cycle. The next candle is usually going to retrace, and you get the retrace. That one moved up 8.4, about 3.7 to the short side. It's enough for a scalp, right? Okay, so let's look at another one. Okay, so this one here, we've got red candle, thick orange is up. Do we see anything in major and minor that would indicate a long or a short? So what about, this is pretty close to what pattern? Anybody know what that looks like? Yep, four-way. So four-way, right? Because major and minor followed each other from overbought to oversold, separate, right? They're separate from each other. You can see there's a separation between major and minor, and they follow each other as they cascade from overbought to oversold. And then when they get there, they intersect. But generally, minors are like that, right? They're kind of hiccuped or sideways. And then majors are all the way through them. This is not a four-way because the red did not go all the way through the gray and black right here. But it looks like one, right? So again, the reason why we have a pattern-based trade is because it has very staunch specific rules. But what's at play in a four-way is still present when the four-way is not exactly the way we map it out, right? It's just statistically, if you're using it based on just the pattern, you've got to make sure all the parameters are there, right? That makes sure that you've got a tight, duplicatable, systematic setup, where this is loose. So this is much more, discretionary, because you could say, all right, I've got a four-way, which usually means long, right? And I've got a confirmation here on thick orange. It's kind of up, right? Just on thick orange. I don't have blue dotted telling me the same. Blue dotted is actually telling me short. But I've got a couple points of validation here that could say I could possibly go up here. The only thing I've got working against me, obviously, is pressure. And these pressure lines are not negatively converging. They're parallel, right? They're not leaning into each other at all. They're parallel. So right here, we could say, let's say, okay, well, we've got our 2 points of validation. Let's say we do go short, okay? So let's say we're just going to go short. Even though this thick orange, we like to see it with more pitch, but let's just say we're going to go short. Okay, now watch what happens to this thick orange, okay? It obviously went long, 4.9 pips. But watch what happens to this thick orange. So now we're at negative 31, 0. Right there, right? That cycle's over. Now the next trade is likely to be the short. Okay, so let's go to another example. If you'd have stuck that one out, by the way, yeah, it would depend on your back testing, but if you would have just stuck it out, you would have gone negative about 17 and then finally came back. There's 8.3. Okay. This happens a lot on the GBP USD. It's every day I can find at least 2 or 3 on a 60-minute candle, every day. So let's go to the GBP USD and take a look at some of these. So right here, for example, we've got thick orange up, thin orange up, blue dotted down, sort of, red candle. So this is telling us that we have potential for long. Is there anything else that's telling us that we could potentially see a long? Pressure's up, right? There's no positive convergence, but pressure's up. It's diverging, but that just could just also be because of the retracement of this current candle, right? Major minor. Does anybody see a long in major minor? Sort of, right? We kind of almost have a head fake. Minors would have to be in the channel. So we can see that majors have topped off, but they still want to buy because they're not really committed to that short yet. Minors are trying to take the market short. Majors are kind of letting them get away with it, right? This one's a lot more complicated because I think a lot of people in this situation would be looking for a short, right? And on a day where maybe I haven't had very much sleep, I might look at that as a short. So it's very nuanced. So we may just sit this one out, right? Otherwise, we'd be looking to try to take that long or try to, inject any other disciplines that we have, right? So we could say, let's open this up. Is that a long or a short trend? Long, right? Pretty steep long. So that's in our favor. From the previous peak to current, I'm not a big fan of Fibonacci, so take this with a grain of salt, right? Almost hit 23.6% retracement already from the high to 23.6. So there are some things still, it's not clear, right? But the better you get with this nuance and how the indicators work on a deeper level, then the clearer these types of trades become. But you're still going to run into situations like this where it's just not clear, right? It's not very clear. Should we short? Should we buy? And if it's a maybe, Cynthia, what's the answer? Is it a yes trade, no trade, and what is a maybe? No. Thank you. A maybe is a no. So it's a yes, absolutely, or everything else is a no, right? So what happens is you say no to the buy, right? And then it buys. You're like, dang it, I should have taken that trade. Wrong. You should not have taken that trade. You did the correct thing. Pat yourself on the back and move on. Don't mess up your process. Stick to it. Have integrity, right? Be integrous to whatever you decided when you were thinking logically. When the trade would have, quote unquote, worked out, had you taken it, the emotional part of your brain takes over and you start justifying why next time that happens, you're going to take it. Even though statistically, you should have by that point proven why you shouldn't take it, right? And that comes by way of what? How do you prove that? Back testing, right? I got to say that at least 3 times in every session. So I've said it twice so far. You guys have one more coming, so look out for it. I was going to say it again just to finish it, but all right. So it's shorts, right? We were looking for a long. It actually went to the short side. In this situation, we probably pat ourselves on the back saying, good, that's, we weren't sure about it, so let's skip it. And then, so if we look at this, a lot of times if I see a lot of wick or shadow in this particular example and it's close to 100, I'll replay that just so I can see, did it at any point hit negative 100? And a lot of times it did within that candle and then pulled back, and that means the run's over and you could likely start going the other direction. Now, if you'd have taken that, you would have drawn down 13.3 pips and you would have been just fine. By the way, these illogical with the TNTs, you're only going to be good for a couple hours. If you're not out of that trade within 2 or 3 hours, let it go. Don't hold on to it. Because again, the TNTs are very contingent on the volume and liquidity in the market, right? So if it hasn't worked out within 3 candles, wherever it is, just stop it. Maybe you're 2 pips up or maybe you're 3 pips down. Just get out of it. Max of 3. Yes, sir.
Back a couple candles when we were looking at right there, we weren't sure what to do, kind of.
Uh-huh.
The orange on mine says 50. Yours has got it out to a lot of decimals. But I found that a lot of times when I'm looking at back testing, when it's sitting at 50 at the end of the post, it does strange things.
So a lot of times if major minor pointed up and it's thick orange is up and it's 50, you're going to get a continuation. That's why you got to use more decimal places.
Okay.
because
So-
yours is wrong. It shouldn't be 50.
So
It's
I-
rounding up.
I need to throw more decimals in.
Yeah.
Okay.
Yeah.
Learn how to do that.
If you're going to use it that way, some people
Yeah.
don't use the thick orange that way. So it's okay if you have, 100 when it's actually negative 99, or 49.96 when or 50 when it's actually
Well, I
49.96.
use it a lot, so I think it's-
Yeah, you'll want to add those decimals, and you want to add to the fifth. So you want to add 5 places after the decimal.
Okay.
Is it that dramatic? I mean, in back testing, I haven't even looked for it, I mean, but,
It does weird stuff.
I like to be a sniper.
yeah.
To each their own.
Yeah.
If you have a different way of using it and it's not really getting in your way, don't even regard it. I honestly, in my trading, I rarely even look at the TNTs in my personal trading. But that's me. I don't like the TNTs. I always say it looks like spaghetti to me. I could look at it. I could look at a chart. I could pull up a chart, like that, and look at it that long, and I can automatically see major, minor, pressure that quick. TNTs, it's kind of like this. Okay,
Yeah.
got it. Right? With major, minor, and pressure, it's a blink. I can see it.
Well, in this case here, I look at that, we could have a head fake, but we have a double cross in that same, so, and with the red on, is red on top? right?
Yep, green on bottom.
Green on bottom, so I look for that going short and then to come back.
Yeah. So, and it did
And
short.
I wouldn't pay attention to TNTs necessarily,
Mhm.
except to back up my decision.
Yeah.
I suppose.
Absolutely. As another form of validation.
Right.
Yep. And sometimes you'll get those scenarios where you're like, well, I can see how the major, minor could go up right now. I need more validation, and then you get that
Right.
TNT, illogical.
I'm comfortable.
Yep.
Yeah.
Now, you'd be right in both these situations. If you shorted, depending on what your stop loss is, right? If you shorted, you're good and your take profit. If you went long and your stop loss is not beyond 13.3 or is beyond 13.3, then you'd have been fine, right? Because we're waiting 2 to 3 candles.
Right.
So, and again, when you're looking at this, it's now being logical, right? Because here is illogical. Now it's being logical. Did it get to 100, negative 100? And those are one of those situations where I'd replay. I can't replay right now. You guys can mark this date if you want and replay yourselves. Just because if I do, it'll jam up the webinar that I'm running. So I'm not going to do that. Okay, let's go to our next. Oh, here we go. So right here we've got thick orange down and thin orange down and blue dotted up with a green candle, right? And we got something similar to what we saw on the Euro USD, but now this is on the GBP USD, right? So you see this reoccurring theme happening right here. Okay, so this almost looks like a duckbill as well, right? Who was pointing out the duckbill earlier? Yeah, it's not, right, because we crossed right there, but it looks like a duckbill as well. So let's look really quickly because I just wanted to kind of right here, you've got a really soft cross, minors are crossed, right? Almost like a hiccup pattern. Green is on bottom on here as well, right? But it's obviously more pointed up, and we have positive convergence. So those small nuances would have made the difference in either selling or buying in this particular example, right? Now, we don't have an illogical setup on the TNTs, but we have thick and thin orange pointed down, and then the blue and thick blue, or thick blue and blue dotted pointed down. So we're sideways here. Sideways of a red is what? To go sideways on a red candle, what color does the next candle have to be?
Green.
Green, right? So by process of elimination, this is a sideways in this example would be telling us buy. You guys follow me? Okay. So it's going to go sideways of this candle. So sideways is telling you a direction. There's only up and down, right? So if the market moves sideways and it just moved down, in order to move sideways, it has to go up, right? So there's only up and down. You can only buy and sell. There's no sideways trade, right? It's a buy or sell.
Or don't.
What's that?
Or skip it.
Or don't trade it, yeah.
Right.
So, looking at that, we could say, okay, we've got majors soft cross, minors actually committing to the short, pressure is negatively converging positively for us, and long-term bias is to the long side. So we have enough information here to take a scalp to the long side, right? But we're obviously not looking at that setup, but just to kind of point it out, because last time we kind of had a combination of this and the next candle, which was major minor kind of crossed down, but softly. Pressure was semi pointed up. Green was on bottom, except that the TNTs were actually giving us a confirmation for the long instead of the short, or rather the short instead of the long, and we ended up going the other direction. So just kind of pointing that out, right? Because again, where are you putting your weight? Where are we? What are we looking at? And then backing up. Sometimes it's major minor, sometimes it's pressure, sometimes it's TNTs. So you can see there's a lot that goes into discretionary trading, and you might feel like you'll never get there. But the fastest way to get there is to focus on one thing and master it, right? If you focus on flat top, you're going to get really good with TNTs. You're going to master a flat top, but you're going to get really, really good with TNTs. If you work on dirty pressure, you're going to master a dirty pressure. You're going to get really good with pressure and major minor correlations, right? So you're getting a byproduct education of all these things instead of just trying to go in and figure it out yourself. Because it took me, after thousands of hours, to figure out that the TNTs were illogical. It took me thousands of hours to figure out that the indicators worked illogical. I always looked at them logically. I always did. The direction they point. I built my account on logical trades, right? I wasn't doing a fraction of the stuff that I know and do now. And that's what I built my account on, because it was simple. But in doing that and mastering that, I realized some of the other nuances. You see something thousands of times, you start to realize things, right? Well, instead of waiting for them to happen in the market while you're live trading or demo trading in the live market, you can backtest and expedite that process, right? So you don't want to practice. Troy was making an analogy the other day. He says you don't want to practice your jump shot during the game, right? You want to practice 1,000 times, and maybe you get 10 times 10 opportunities in a whole game to shoot that jump shot. But you've practiced it thousands of times leading up to that game, right? Because you know it by heart. You know exactly how the ball feels on your hand. You know how to flick your wrist. You know the follow through, all that stuff, right? You know how to jump, how to land, the works. You've got it all figured out because you had plenty of opportunities to practice each facet of that multiple times so that you can become a master of that, right? And even those guys, even the best, Kobe Bryant, Michael Jordan, LeBron James, all these guys that are going to go down in the Hall of Fame, guess what? They miss shots. Yeah, Michael Jordan missed shots, right? Kobe Bryant missed shots. LeBron James missed shots. All of them do, right? Nobody shoots 100%. Do you think that they should have just been canceled? Their contract should have been canceled? They should have been traded? No. Do you think they should have quit? I mean, some of them, they're doing awesome if they're shooting 40%, right? They're doing awesome. Are you going to trade at 40%? Better not. No, that's fine. If your risk-reward ratio makes sense, heck, it's all about the dollars. So if you're making money with it, fine. But you figure out how it makes you profitable, and then you do it. And then you rinse and repeat. You do it again and again and again and again. You just never stop doing it. You just always do it. And then you practice something else, right? So, Shaq was good at the dunks. He should have stayed on the free throw line during his practice more often. Right? It's just whatever, and it's not about like even wanting to be well-rounded. Like, well, I know enough about major, minor, and pressure, so I'm going to move on to TNTs. Well, have you mastered any one of those? If you haven't, why are you moving on? I already know dirty pressure, and I tested it for a couple months. I'm fine. But you haven't mastered it. You just kind of know it. You're familiar with it. I can say dirty pressure, you know what I'm talking about, and you can tell me the rules. Right? But you don't know, again, the three things that we want to do with our trading is know how to identify the trade. Cool. If you know how to identify dirty pressure, raise your hand. Okay. Those of you guys that raised your hand, you're 1/3 of the way there. You know when to place the trade. Those of you guys that know dirty pressure, you know when to take that trade. Raise your hand. Good. So you guys know that it ends that way at the beginning of the next candle you execute, right? Okay. Now, how about how to place the trade? That means stop loss, take profit, percentage of risk, lot size. How many of you guys know how to place that trade? 2 of you, right? Right, you haven't back tested it. I know Cynthia has. She sat in my office for 3 hours the other day. We were going through her data, right? And so I know that she's practiced it. She had on that list, she had like 1,100 trades, 400 and something of them were actually dirty pressure. But she tested more than double that in scenarios that were not dirty pressure but had some of the same elements.
800
800?
or 8 something.
I thought it was like 1100.
It was 1,100 total, but 800 of them were actually.
Oh yeah, that's right. 1100 in total. 800 of them were dirty pressure. 813. It was 830. I'll pull it up right now. We can argue, or you can just concede that I'm right. No, I'm just kidding.
There you go.
I'm just kidding. Listen, I can get away with that. I'm not married to her. If I was married to her, I'd say yes, dear. That's the right answer, and that's through back testing that I know that. I said it 4 times. We're good. I met my quota, right? All right. Okay. All right. So let's look at our next example here. Okay, we were talking about this. So we had validation here to go long if we start looking at the indicators differently, right? But you can't just jump into it and expect from this one example to be able to master all the things we just discussed on this one thing, right? Because there's all these different nuances at play, some more important than others in different scenarios and situations. Therefore, if you took all the combinations of all the ways the TNT, the major minor, the pressure could look, you have millions of combinations of possibilities. The only way that you can make any of those correlate is become more familiar with them. So versus trying to figure out how to trade the indicators discretionarily, focus on something systematic and let the natural recourse of things take effect, right? And master one thing at a time. Keep it simple. The simpler, the better, because you're going to absorb more of that information. Where if your setup involves like 5 different charts and 30 different combinations of things, you're never even going to master that trade. Good luck back testing it, by the way, right? Something simple. The simplest things will get you rich. I don't mean like rich in love. I mean like dollars. You're going to increase your bank account. You're going to spend it on fancy things. That kind of rich, right? The kind of rich that you hope to be. Zed, do you have a question? You scratch your head.
Scratch my head.
All right.
There's less hair than usual.
All right. So this scenario we have illogical, right? I think we already looked at this example, and it was very similar to the one that we looked at on the euro versus US dollar. Majors are up, minors are down. We don't have positive convergence. It's more parallel now, but it is pointed up. We don't have green diverging from red. So that's positive to the long side as well. Plus we have the thick orange and blue dotted agreeing, and thick blues are relevant. Thin and thick orange and blue dotted right now is agreeing with our long, not our short, right? Which is backwards when you look at the TNTs. Majors are giving us confirmation. Minors need to correct. So if minors correct, then they do this, right? Okay. Now, this is kind of like one of those fake out scenarios. Majors went one way, minors went the other way, and the majors continue in that direction. Minors have to correct. So if they did that, now major and minor are both pointed up. It's likely that whatever that is, that green candle, that's the end of our move up, right? Or pretty dang close. Let me erase that. Okay. So we did move up, probably not much, 5.7. Yeah, enough, right? We still have an illogical setup on blue dotted and thick orange. Thin orange is actually pointing up. We'll do a whole other lesson on thin orange another time. And we've got pressure still parallel. They're not diverging, nor are they positively converging, but they're still pointed up in parallel. We have major, minor, double committed. So 60 to 65% of the time, you're still going to get a little bit of long out of that, but not much, right? And a lot of times you'll get long and then short on the same candle. So we're going to skip that one because there's just too much to go into on that one, and just on a 60-minute chart, you probably don't want to press your luck on something like that, especially because we were already considering that in a situation like this, we'd more favor a short. But we just don't have enough validation to short right now. But we'd already decided logically that we were going to favor a short. So going into this candle, we were favoring the short. But the indicators are telling us there's still potential for long, right? The conundrum to that is generally when you're looking at a follow-up to a fake out, everything is agreeing maxed out to that direction. So in this case, buy, right? Major minor pointed up, pressure's up. A lot of times TNTs are agreeing with the up. Where here TNTs are not. But again, in and of themselves, it's not often that it's enough. Actually, they are agreeing illogically, but in and of themselves, it's not enough to base it on just that, right? So everything technically is justifying the long, right? Pressure, major, minor, and the illogical on TNT. So this, however, is again one of those situations where everything is being justified to go long, but it's maxed out, and we know that, so usually we short. So at that point, it's a shorter time frame chart or a longer time frame chart, something like that. On just a 60-minute, it's better to just sit a scenario like this out, sit it out, right? You don't feel like you missed there because you already said, if major minor point up like that on the next one, I'm going to be looking more for a short, not a long, right? Now, if you know how to use positioning, there's a video on it called Aggressive Positioning in the Mastermind. Then you could position that, and after the move, then short it, right? But you probably don't want to try to get into that long or even short at that point. It was just there was too many variables that weren't adequate enough with just a 60-minute to justify the trade, right? So it was a maybe, which means no. It was a maybe, so it meant no. Yep. Or keep your money, right? So there's the short finally. So that only went up 4.6, and then we saw the short. So was this accurate? Yeah, because 60 to 65% of the time we could see some up. But we're also expecting down to come. What we're not expecting is green, 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 right? We're expecting maybe some green, and then we're expecting some short. The question is how much short. That's the difficult part, right? How much of that is going to be short? And a lot of times that involves other time frames as well. Right.
In an uptrend like that, you wouldn't expect much of a short. I mean, what came was a lot more than what I would have expected.
And let me be careful how I say this. If you rely on trend that much, yeah, stick with it if it's working for you. I will look at trend usually as like my fifth point of validation.
Right. That's all it is.
Yeah, but it'll do you good, right? But I'm looking more at my indicators to say, okay, this is going to trump, this is going to supersede things, and I traded 96% win rate, so 96% of the time that it works for me, right? For other people, it's like trend and then put everything else into place, right? And that's okay because it works really well for them. Some people will take 3-pointers, like I know Jared's back tested 3-pointer, and one of the things that we had talked about was trading with just the trend because it happens so often, but the percentage of win is really low. So it's like, okay, well, let's just look at the trend, and then we'll take the setups that are just with the trend. How does that work out, right? And see if that helped increase it, right? So in that particular setup, even if Jared isn't like a trend trader type, if in that particular setup he realizes that trend is going to be advantageous to him, then he can add it for that particular setup and maybe not another one or not consider it in other ones, right? And other people will consider it in all things, and if it works for you, it's okay. Nobody can knock it if you're making money. Let them knock it all they want. It doesn't matter. It's not going to hurt your bank account, right? That's what's great about being a day trader. You don't have a boss, and you don't have to deal with office politics. If people don't like what you're doing, tough. Most of the time, it's just because they're jealous. You're making money an hour a day, and it's taking them 40 hours a week to do the same thing. All right, so let's look at our next. So that one it only went up 2.5. We did have that kind of illogical setup, right? But we had already surpassed our rule of 2, right? Because we had 1, 2, and then that's it, right? Plus, we had some speculation as to what was going to happen after that anyway. Now we see that divergence in pressure. Again, waiting for that 0. Sometimes it comes, sometimes it doesn't, because now we're reactive. Red candle, thick orange down. Let me erase this. And again, 91, there's the shadow. When this played, did that get to 100? I really want to replay it, but it's going to mess up my webinar. So mark that date, GBP/USD, and replay that candle. See if as it went short, if it hit negative 100. right? Just as validation for yourself to see what happens at that point. Here's another illogical, right? Thick orange is down, green candle. We don't have a lot of validation on major minor for a long, right? Well, I mean, little to none, right? This, sometimes we see them do this, right? But it almost looks awkward. Even drawing it looks awkward, right? Because generally what happens with that is this, which would be a short along with minors. Pressure is still pointed up, but divergent. So we're seeing more sideways, right? It's sideways up, it's more sideways. Sideways of a green is a red, right? So again, now you can see why it takes so many sessions to teach this thick orange, because it tells you a lot when there are other things on the plate. When it's by itself, it's only spelling out part of the story, right? And so then you've got to look at the nuance of major minor. So it's not as duplicatable as some of the other patterns any of the other patterns for that matter, right? Because the other patterns are very systematic. These are the rules. If these rules are not present, it's not the pattern. Where this is saying, well, yes, we do have the setup, right? Thick orange is down, thin orange is down, blue dotted is up, right? So we got three really important ones telling us that we have potential for long, right? But then we have majors that are more like side, kind of, almost hiccuped, minors persisting, pressure is more sideways, which is giving us more credence to the short side, even momentarily, before long, right?
Yeah, that touched 100.
It did touch 100. So this 91.89, when you replayed it, was at 100.
It touched 100. Yeah.
And then it at one point it touched 100 and then pulled back. So it's
About halfway through.
So it's consistent, right? Consistent when you see that wave. That's why sometimes, like Jason, you hear Jason talking about like the TNT and its cycle trade, right? Well, that cycle trade only works a lot of times because this sequence is in play, right? And sometimes it doesn't. But that cycle trade is in play during these illogical setups. Okay. So right here we pulled up. Majors didn't cross for the most part, but we still saw a nice little up. The majors kind of went sideways, and then minors kind of pulled it up. Pressure didn't do much for us. So again, it was a maybe, which would have been a no. Because again, just by itself, the 60-minute was not enough to make that call confidently, right? It would have been a maybe. Maybe, slightly to the yes side, 60-40, but it's still a maybe. If it's not a yes, then it's a maybe, and maybe is a no. Now, if we add a 240 or we added a 5 minute to it, we might be able to see a clearer picture. But did you see how much more complex and convoluted that trade becomes then? So I want to show you guys these things because I think it's imperative to plant these seeds. But I know it's not going to bear any fruit. And if you try to force it, you're going to be like, choking it out, and it's just not going to grow. Right? Yeah.
One of the things I tend to do when I'm doing this type of back testing, just practicing,
Mhm.
I tend to take way too many trades.
Yeah.
I think when you first start trading, you do the same thing. You think for every candle, you have to figure out whether it's going to buy or sell, and then you have to make a trade.
Yeah.
What we're doing here is great, but honestly, would you trade this way, or would you be much more discretionary in which ones you took?
Yeah, and yeah, you're right. You wouldn't just take it every time that thick orange is telling you that it's illogical. You'd want a clear picture, as clear as possible.
Almost like prove it to me.
Right.
Convince me that, yeah.
Yep, I see this. I know what this is indicating, because it doesn't matter if it works out or not. This is telling us to buy. It doesn't matter if it's sold. This was telling us to buy. Now, even though it's telling us to buy, there may be other things at play that are stronger that are saying it's going to sell. So you may still get a little bit of buy, that 1.2 pip wick that you see sometimes, So there was some buy there, but it just wasn't strong enough, right? So is it that it's wrong? It's not necessarily that it's wrong. It's just not enough, right? This one obviously would have worked out. It went up, depending on how many pips you're going for. That one went 7.4. But it obviously went up. But here's where the cycle happens again. Depending on where that was when that wick happened, this negative 65, I don't think it would have been at 0, but a lot of times you'll see that cycle. So when it gets to 0, and that could have been at 0 at the wick of that one. And that could have been at 0 at that wick. So a lot of times you'll see it max out at 0 on top. After it goes illogical to logical, it'll run its course. And then after you hit that 0 or on that candle, you'll start going the other direction. So 1318 at 0100 on the GBP USD, if you guys are curious to look that one up to see if that 0.3263 ended at, or was at any point at 0. Okay, let's look for another one. So this is actually one right here. Thick orange is down. Blue dotted is up. Thin orange is also down. It's just you can't see it because it's underneath the thick orange. And thick blue is up. And we've got a green candle. And we've got, anyone? Yeah, Hydra, right? Pretty close. I don't know. That could be just a little bit up. It looks more sideways, but that's pretty close, right? It hit 0 2 or 3 times? Yeah. So it's consistent. That cycle is consistent. Just be careful because it could hit 0 and still go up as it's at 0, right? So just be careful. But you can see, okay, it hit 0, so the next candle is likely to what? Short. So, yeah, look at this, though. I don't know a lot of people that are comfortable shorting when the major minor look like that, right? But if you've backtested and you see that it cycles and statistically it's in your favor that it's going to short next, you better short it the next candle, right? If you've done the homework and you know that you're going to make profit with that, it doesn't matter if it loses that time. They're all going to lose at some point, right? It just matters that your winners supersede your losers, profit-wise, right? So right here we had illogical, right? So we'd be looking for a long. This was more giving us kind of a hydra and a short. We do have positive convergence here on pressure. So this is actually in our favor. Positive convergence is in our favor and the pitch. But what's not in our favor is green is on bottom. So that's short-term short. And that's what makes up our hydra. Plus the contrary candle on a hydra actually gives us like on the Euro US gives us like a 92% accuracy. On the GBP USD, it's not going to be the same. But we do have some confirmation for short, not long, except for the thick orange, blue dot. We got 4 out of 4 saying long here, right? Not much saying long here, and a little bit saying long here. Now, if you've back tested it again, if you back tested it, then you'll know, am I comfortable with this, right? Or do I want to rely on something else, like a longer, shorter term chart? We know this one already works out because I had already clicked the next candle. Again, depending on how many pips you're going for, that one 8.8. But this, like on the Euro US, is not a common occurrence in the major minor. It just looks weird, right? If you get hydra on major minor, generally you'll get duckbill next or something like that, right? Where here it went and then did this awkward cross thing like that. It just looks awkward. Or is it just to me? Is it just me that looks awkward too? Anybody else? That just doesn't, that seems unnatural for major and minor. Okay. So I've got 4 minutes. I'm going to wrap up with that. I want to open it up for questions. If you guys have any questions, if it hits 0 and still goes up, is that the stick above the candle? The stick above the candle body. So the wick, if it's at, so right here, one of our members replayed it and saw that it went to 0 during this wick right here. So the thin stick on top is a wick, the bottom is a shadow, and this is the body. So when it went up to the wick, up on the wick, the value of the thick orange was at zero. And before the candle ended, it digressed, and the value settled at negative 4.03 and some change. I don't know if I answered your question, John. Let me know if I answered that correctly. So again, a lot of the purpose of today's session is just to plant those seeds, right? So that you guys can start looking at the indicators a little more dynamically. So when you back test things like flat top, 3-pointer, half court, these things will start to stick out to you. Or if you use the TNTs in your regular trading, if you've already proven something out and the TNTs are working in that regard, continue to use them that way, but maybe pay attention the next time you take that trade based on the TNTs if the candle is opposite of the direction of the thick orange and possibly the blue dotted, right? And if it is, are those usually the situations where you're losing the trade? If it is, then there's your sign, right? You can kick those out and increase your win percentage, keep your same risk to reward ratio, make more profit, right? So just some food for thought. Okay, thank you, John. Any other questions? You guys are pros? You know it all? All right, good. All right, guys. Normally I have somebody come in here and start talking, so I try to leave room for them, and they're just kind of gone, right? Everyone kind of checked out. It's a Utah holiday today. For those of you guys that are online, some of you guys probably don't know that, but it's a Utah holiday. So we've actually I'm surprised that we had, as many people show up today as we did. I was expecting maybe 3 or 4 people. So appreciate you guys being out. We're going to wrap it up. For those of you guys that attend the mastermind, we'll see you on Tuesday. Next week, I will not be doing the Proving Ground review. And depending on who does it, it might not be broadcast via webinar. So just keep that in mind. I'll give you guys a heads up on Slack. Who's going to be, if it's going to be recorded. Otherwise, obviously, we're still going to have a Wednesday night, but I just won't be doing it. You're very welcome, John, Mark. Thanks for joining us. And you guys have a good night. Thanks. My pleasure, Bill. Take care, guys.
Thanks, everyone.
Yeah,
My
thanks, man.
pleasure.